Hi, Richard Hemming here, editor of Under the Radar Report. It's great to be back. I'm here with Peter Chilton, mining analyst at Under the Radar Report. Hi, Peter.
Hi, Richard. How are you?
I'm good. So here we are back again to talk about the explosive area of uranium stocks. And uranium, as we all know, is used to produce nuclear energy. Why has there been so much interest in uranium stocks, Peter?
Well, I think it's because of an impending shortage of uranium, probably for around about the year 24-25, and investors, are trying to get set in stocks which are going to benefit from that higher uranium price.
So you probably call it an inflection that's about to happen, wouldn't you?
An inflection point, exactly, when suddenly demand is above the supply.
And can we just talk a bit, just expand a bit on the uranium oxide price? I mean, it's at depressed levels, but that hasn't always been the case. Can you take us through the history?
It's had quite a history. The price peaked at around about $1.40 per pound. $140 a pound in 2007, when there's a bit of a bubble going on, and then it fell back to around about $60 a pound, and then there was another small bubble, another period of speculation, which drove the price up again in the beginning of 2011. And everything seemed to be going quite well for the uranium price before we had Fukushima, and that caused those problems in Japan caused the uranium price to collapse again, and in fact fell all the way back from over $70 a pound to $20 a pound in 2018. A very slow crawl down to that lower level before it started to recover again.
So is the uranium price, which is now about $32 a pound, is that still depressed because of Fukushima, or is there a lot of stock out there that's depressing the price?
Well, one of the aspects that has depressed the price for many years is a lot of stock, which has meant that even though demand was very high, supply could be less than demand because of all those stocks. And a lot of those stocks came from weapons-grade material, surplus to requirements and being available for power generation. Now, what's happening is that a lot of those stocks are winding back, and so the full production rate from mines would be required at that inflection point in 2024, 2025.
But what we've also got is increasing demand, haven't we, for the clean energy that uranium kind of represents with its conversion into nuclear?
Well, we have. We've actually got a double whammy, because at the moment we've got a number of uranium mines closing down, and then we've got probably another 50 or so new reactors being built. So the consequence of lower production plus that increased demand means that the imbalance suddenly becomes much larger.
And we've got the China factor involved in that equation, don't we?
Well, a lot of the demand is being driven by new reactors in China, as well as new reactors elsewhere in the world, particularly in India as well as China.
And the reactors are much safer now than they were in the past, or is there much difference in the technology?
Well, the technology is actually advancing quite rapidly. And in fact, another source of demand could be the fact that with new technology, they're now able to build smaller modular plants. And it may well be that these smaller modular plants will be used in countries which have never had uranium generation before.
And how big a factor is that giant Canadian company Kamiko Corp? How big a factor is that company in relation to, the supply dynamics?
Well, I suppose Canada, and Kamiko is in Canada, supplies around about 12% of uranium supply globally. Kamiko would probably provide about 2/3 of that. So it is quite significant. And the thing about Kamiko, it's shown a price discipline where it's cut back production when prices are low, so that it's always operating at a profit.
And we've had some success with Paladin Energy, which has been kind of a mainstay on the Australian scene. Can you tell us a bit about Paladin and what they've got, how their operations are going?
Well, it's not actually in operation at the moment. It's a formal operation, closed down because of low uranium prices, now been resuscitated by Paladin. And that's not in production yet. but it's really just waiting for the uranium price to increase before recommencing production. Now, at the current price of around about $32 a pound, that's really insufficient. A lot of people are talking about maybe prices somewhere between $50 and $60 a pound required to really start projects being reopened and new projects starting to satisfy that demand. That's quite a bit higher than the current price.
So why is Paladin a favourite?
Well, Paladin is a favourite because it's an existing mine that's already operated, got a proven track record, got experienced operators. The various generators are familiar with the product that Paladin used to produce, and the mine's in Namibia, which is a proven uranium production area. So it's got a lot of ticks, really, ticks in the various boxes as a reopening candidate. And because it's got this track record, it can get it back into production much earlier than a lot of the more greenfield type projects.
And there are two other companies that we've found recently. Would they be, prospective Paladins, or are they far behind on the development curve?
Well, Boss Energy is a producer, a former producer in Australia. So it has a track record, can be brought back into production fairly quickly. Fairly small producer, but it produced very successfully. So that's a very good candidate for a reopening, and obviously been very attractive for investors. Another one is Bannerman Resources. That's got a project in Namibia, quite close to a former uranium mine that used to be operated by Rio Tinto, also quite near Paladin's project. Got good people behind it, experienced people with experience of working in Namibia. So that's a very good candidate, maybe a bit slower to get into production than Boss Energy, but certainly ticks a lot of boxes. Has a lot of experience and contacts to get into production with a new project.
Well, thanks to Peter, we have a lot of expertise on the mining side of things, and there is a lot of excitement in both the uranium, the lithium, and many other sectors on the mining front. So we look forward to bringing more expertise from Peter down the line to Under the Radar Report subscribers.